Good day, we're Team Z, and we have analyzed Magnet Public Company for the December 9th, 2015. Magnet has strong market position. It shows the highest financial result and lower debt burden. During whole history, Magnet stocks has been growing and never fell lower than 50% of its previous growth. The biggest joint stock share belongs to its founder, Sergei Nikolaevich Galatsky, and is equal to 37.6%. Other shareholders do not have more than 4%. We give a hold recommendation for the Magnet stocks, with target price 10,381 rubles. A share price on the valuation date was 11,180 rubles. That gives us 7.15% for the downside potential, and we still keep this recommendation. Magnet is a leader among all Russian product retailers. It had the biggest market share, 6% in 2014 and 7% in 2015. The company has always developed without mergers and acquisitions. Its core business is product retail for middle-class customers and below. It was founded in 1994 as tender, with cosmetic stores as general business model. Later, in 2001, new kind of stores has been added. It was product retail stores, and tender transformed into Magnet. Nowadays, Magnet is represented as a vertically integrated company with 4 kinds of stores as a general business model and additional businesses as subsidiaries companies. Magnet has wide geographical coverage and the biggest logistic network. It's a very stable, strong managed business.
Despite Russia has a great market for food retail, key macroeconomic indicators such as GDP growth ratio, inflation, currency rate and real wage dynamics make the country unstable and increase business risks. The same issues demonstrate research of A.T. Kearney, a global consulting company, with its annual report about retail markets and Global Retail Development Index. According to their estimation, in 2015 Russia went down from 12th place in the world to the 21st, but it still stays too huge and too important to be ignored. There are 5 general competitors on Russian food retail market: X5 Retail Group, Dixie, Lenta, OK and Magnet. All these companies have total market share more than 18%. In spite of strong competitors, Magnet has steady growth ratio and increased selling space very fast. Magnet has also the highest ratio of average profit to revenue.
A discounted cash flow analysis is represented by free cash flow to firm and free cash flow to equity models. Both are forecasted on 2-step basis, including 3 years active growth period and further terminal growth. FCFE model is applied as the significant cash outflow is not expected and the company's leverage is stable. FCFF model is utilized as it takes into account company's debt level. The total price based on DCF is equal to 9,624 rubles. The DCF models are sensitive to the factors which influence company's revenue. Essentially, it's net store openings per year. Convenience store is a general business model for the company, so we believe that during the forecasted period its share will decrease, but it cannot fall lower than 65% of all stores. CapEx will be invested mostly in druggery stores. Besides, total revenue growth is strongly dependent on like-for-like revenue growth, which is based on like-for-like average ticket and number of customers. To calculate cost of equity, traditional CPM model based on federal loan bonds and euro bonds was used. The total CPM mini is 14.16%. To estimate cost of debt, we used market value of company's bonds and book value of company's credits. Thus, the capital structure is 95% equity and 5% debt. The total weighted average cost of capital mini is 13.65%. The terminal growth rate was estimated on the basis of the forecasted 2018 GDP growth and average historical CPI. It's equal to 3.8%.
Another companies with comparative valuation was chosen based on their geographical location, so that they operate in a similar market with Magnet, share with the core business, food retail in the total revenue of the company, and return on sales and EBITDA margin ratios. Selection of peers was quite complex, caused by the fact that Magnet's financial indicators significantly exceed the average value of the market. Comparative valuation was calculated based on 3 multipliers taken for the trailing period of 2015 and the leading period of 2016. These multipliers were taken with different weights according to their standard deviation and our own estimates. Enterprise value to sales multiplier is significantly higher than those of the comparable companies. However, due to the return sales ratio of the company that is also much higher than average, we do not think that the company is overvalued. Price to earnings ratio is about 20% below the industry median, that also closely connected to the Magnet's profitability. EV to EBITDA multiplier, despite higher than industry EBITDA margin ratio for the given period, is practically equals to the average value of the market. That, from our point of view, indicates about slight growth potential of the company. Thus, we believe that based on these three multipliers, the company was fairly valued with small growth potential, and we assess its price at the level of 12,147 rubles per share. However, given the difficulties with the selection of analog companies, in the final valuation, the result of this method was taken with a lower weight comparing with the more fair DCF analysis.
A Monte Carlo simulation was used to analyze the potential outcomes of Magnit's share price valuation. The key factors for the model are like-for-like revenue growth, number of stores growth, and new stores influence coefficient. These inputs lead to target price of about 10,300 rubles. Hold recommendation will be given in 25% of cases.
From 2012 to 2014, it was a sharp increase in Magnit's annual revenue growth, caused by boosted number of new selling spaces. We suppose growth of revenue, net income and EBITDA margins will reach its peak in 2016, caused by CapEx program and high inflation rate. In the future years, we expect annual revenue growth to decrease to 24% on average, but it is still high. It can be explained with a tendency for maturity stage, when company is stable and doesn't have a rapid development. According to our estimations, net margins tends to be stable due to the fact that Magnit manages to succeed with its expanded vertical integration. Turnover and liquidity ratios are normal for retail, so we believe that Magnit will not face any operational or financial difficulties. Magnit has a low debt burden and high interest coverage ratio and is not planning to change its debt policy. It doesn't have any debt nominated in foreign currency. Hence, recent ruble devaluation doesn't influence much on Magnit in comparison with its peers. One of the biggest competitive advantages of Magnit is its independency on debt, allowing it to expand its business without any risk of insolvency. Due to performed upon analysis, Magnit uses its resources effectively, since ROE has been increasing steadily for 3 years and tends to grow in forecasted period, mostly due to slow rise of EBIT margin and asset turnover ratio. Another point to be made is that Magnit has the highest ROE among its rivals.
All considered risks were divided into 4 groups: political, economic, market and managerial. According to our research, the highest probability have risks related with macroeconomic situation. Difficult conditions for Russian economy during the last year have led to decrease of purchasing power of ruble, and real wages became lower. As a consequence, Magnit can lose some share of its clients. Political intensity, international sanctions and Ukrainian conflict can be considered as risk factors as well. For example, the company has global depository receipts on London Stock Exchange, and limitation of access to internal capital markets can restrict companies' opportunities. Due to nature of food retail markets, power of customers and intensity of competitive rivalry have the highest impacts on the business. At the same time, there is a huge gap for new companies, including foreign. A huge share of Magnit assets is represented as real estate, and its value can be reduced due to bad conjuncture. Notwithstanding all these obstacles, Magnit is a strong leader of Russian food retail market.
Summarizing all above-mentioned information, it can be stated that Magnit is stable and organic growing company. But according to the current macroeconomic situation, we give a hold recommendation with target price 10,381 rubles. Thank you for your attention.